Good evening, and thanks for joining us tonight. We have the great pleasure of having Cory Burnell here with us, and he's normally sometimes on this side of the table, but we have him in this is his wheelhouse, and we're talking about his level of his area of expertise, and a little bit of a post-election conversation. And this is, what do you think is some of the financial ramifications of the election, even though we don't know some of the top line results yet, but we know some of them, and just a little conversation on that. I mean, what are your impressions so far?
Yeah, well, John, thanks for hosting this time, and I get to be a guest here, and I get to say some of my thoughts rather than I do all that asking questions, right? For our folks who are watching this, obviously it's not live. This is the day after the election, and we still don't know who's going to be president come January 20th, right? So a few states still outstanding, too close to call. From the concerns, as an investment advisor and financial advisor, I deal with the economy and the policies that come out of Washington, D.C. and how they'll impact money, right? For clients. So these are interesting times, to say the least, and topics. So you want to kind of, where we're going to delve into different policy.
How about start off on the things that we know, because the market has been up big yesterday. It's up big today. I think there was some, I heard some of the talking heads this morning saying that I think that the Senate appears that it's not going to flip. The Senate looks like it appears going to stay red. I think put a lot of it gave some comfort to the financial markets. As far as a stability play and stuff like that. Is that one of the things that we do know so far?
Yeah, so far, we know the Senate's going to stay in Republican hands. I mean, I guess they haven't exactly called that, but it looks. Yeah, that's the play. And to your point, we know that the markets like stability and they hate uncertainty.
Right.
So think about anybody who's allocating capital to an investment, if they know what the rules are, they can make an informed decision about how to allocate their capital. If they don't know what the rules are, then you're going to hold your capital close to the vest until you do. You're just not going to take the risk, right? So it's more important that we know what the policies and rules are than what the actual policies and rules are. That's actually an interesting take, right? But that's the fact. The markets, go to the emerging markets, go to Eastern Europe or South America, capital gets allocated there so long as people know what the rules are, and the rules are very different than they are here in the United States. So just to the point of certainty. So if the Senate stays in Republican hands and the House has been called for the Democrats, so we still have a split Congress then, actual law won't really change over the next couple of years, right? So the Tax Cuts and Jobs Act, the Secure Act, which impacted people's retirement plans, those things are going to be kept in place. Corporate tax rates will remain the same regardless of who's in the White House, and that impacts people's decision on capital allocation.
Right.
So for example, when we look at capital markets, they're international, of course, right? Well, with the Tax Cuts and Jobs Act cutting our corporate tax rate from a top rate of 35 down, flat rate of 35 down to 21%, we saw a tremendous increase in our competitiveness internationally for capital investments. So we moved up on the Heritage Foundation's international tax competitive list several. I think the bottom is being ranked 30th, and we moved up from 26 to 21 because of that act.
A question on that before we move away from that subject is that one of the things I never hear about is if you look at corporate tax rates, maybe I'm wrong, but to me, corporate tax rates, you're looking at world competitiveness. Everybody's, all the buzzwords of the election, they want to have those rich corporations pay their fair share type of thing. But if you look at a corporation, you want your country to be competitive worldwide on a tax basis, right? Isn't that been one of the things where now we are? But for many years, an American-based corporation was at a tax disadvantage structurally. right?
So much so that they would leave their profits that they earn overseas,
Right.
and not bring them home. Repatriation.
Which they did repatriate a lot of stuff here during
That's exactly right.
Okay.
The Tax Cut and Jobs Act brought a tremendous amount of capital back into the United States. So yeah, let's talk about corporations paying their fair share.
Right.
There's a number of taxes involved with corporate business. You've got payroll. Think of all the people they employ. Okay,
Right.
let's talk big Fortune 500 corporation. Everybody they employ, well, that's 15.3% payroll taxes, Social Security and Medicare on both sides of the employee and the employer paycheck, totaling 15.3. All those employees are paying income taxes. The corporation then was paying 35, now it's paying 21% on its net income. Then when the corporation distributes dividends to its shareholders, those shareholders pay tax on the dividends. So corporate earnings are actually taxed twice. When Warren Buffett says he doesn't pay income taxes, he's a liar. He owns corporations. Those corporations pay income taxes. He then receives dividends he pays taxes on. So
Is the tax on dividends the same as a capital gains rate, or what? How
two
is the
types of dividends.
Okay.
Yeah, there are qualified dividends, which are taxed at like a capital gains tax rate of 15%, and they're qualified because that corporation is paying corporate income tax. And so we're acknowledging in the law that we're taxing this money twice. Then there are corporations that don't pay corporate income tax. They pass the entire dividend
So
through.
it's a pass-through,
Like
yeah,
a real
okay.
estate investment trust or a business development company.
Okay.
That pass-through income hasn't been taxed at the corporate level, so that's an ordinary dividend is taxed to the investor as ordinary income.
Okay.
Yeah. And then again, we pay taxes on capital gains taxes when the shares of our corporations go up, right?
Right.
So corporate America funds a lot of our tax bill, and it's a
Well, and
misconception
that's
that they
why I
don't
think
pay
this,
enough.
and I think, yeah, I'm not trying to pat Amazon on the back because they've got issues, but the point was, everybody's saying that Amazon paid no taxes, Trump paid no taxes basically,
Yeah.
but what you're talking about is corporations in the U.S., even if they bottom line even if they weren't profitable, still pay a lot of taxes.
That's right.
Okay.
Yeah. Yeah, even if they're not profitable, they're still paying a lot of taxes. All those people they're employing are paying a lot of taxes.
Yeah.
Got capital gains taxes. They may not be profitable, and they may be paying a dividend that's taxable.
I guess onto the subject matter on this is post-election. If you're
Yeah.
let's say we do option A and option B. Let's say option A, that Trump is able to do some legal challenges and everything else, and he gets a second term. What do you think would be the financial outcome on that, or versus a Biden term? What do you think some of the recommendations are a little different?
Well, what just went through my head was if Trump, for Trump to get anything through the House of Representatives, he'd kind of need a mandate. And with
Right.
a tight election like this, he's not
He
getting
doesn't
that.
have his mandate.
But then what went through my head was, Trump doesn't feel like he needs a mandate to do anything.
He is the mandate.
He is
Yeah,
the
he
mandate.
is the mandate.
So that's not really going to play. But I'll tell you what, the representatives in the U.S. House, they're not going to see that he has a mandate for any particular legislative agenda, right? So I think we're still in the same situation of there's no new legislation. It does look like the Republicans are picking up seats
They
in the
are.
House.
Yep.
So
What is it, 5?
I think
it's
that might
5.
be the number
Yeah,
at
as
this
of
point.
tonight, I'm looking at 5. Yeah.
Yeah, so still not enough to control it, but maybe there would be some bipartisan legislation that's just enough to get through. So for example, when they passed the criminal reform bill that Rand Paul kind of guided through the road up, and that was bipartisan, it got
Right.
through the House. So
Right.
maybe legislation like that could get through, but any kind of significant fiscal policy changes, we don't really see
Yeah.
people crossing the aisle much on that
Yeah.
stuff. So, if Trump wins, I don't know that we have too much in the way of fiscal policy changes. But of course, there's another election in 2 years.
2 years.
So
We could have a final 2 years of.
and oftentimes, if you look historically at those midterm elections, sometimes because there's a lower turnout, that turnout tends to be more Republican. So I suppose that if Trump won and the Republicans continue to hold the Senate, at the midterm election, and the House flips at that time, there may be 2 years in the second
Sure.
part of his
Yeah.
presidency that could
Yeah.
he could have some policy impact.
If you're looking at the Biden presidency, and typically, some of the language will be less growth-inducing, so to speak. But what are you looking at? But also he's going to be the beneficiary, I think, of some of this stuff going into 2021. Virus, vaccine. Some of the others. So I mean, 2021 will probably looks like it could be really good anyway.
Yeah,
isn't that?
yeah. A couple things there. I really want to touch on 2021 because that's going to be a big year. There was a thought there on policy with regard with regulations and industries that would be impacted. So
yeah.
there, whether Trump wins or Biden wins, there's a tremendous amount they get to do on the regulatory front, and particularly with international business dealings that they don't need a lot of congressional approval for. So we could see particular industries, affected by who's in the White House.
Energy
with being top of the mind awareness, right? That could be, but those would be more of the minute changes. So yeah, to your point on 2021. I mean, the GDP growth in the third quarter of this year was 33.1%.
That was nuts.
Now we never have a number like that. I think you got to go back to the Great Depression for numbers like that. But that's because we're coming off such a low base, right?
Well, isn't it true that I looked at some of the sectors now are back above their pre-COVID? So some sectors have actually.
Oh yeah.
Not only recovered, they're above where they're running ahead.
The
right?
housing sector, for example, is this summer has been at all-time highs, gangbusters. They can't build houses fast enough. I mean, what impacted them was existing home sales dropped through the floor.
Right.
Because nobody was moving. Everybody got locked down, COVID. Nobody was selling their house, so the only thing out there was new home building. And the home builders already couldn't keep up with demand in 2019. So then in 2020, I mean, it was just the doors are blowing off for the housing sector. Materials, for example, I mean, that go into these type of products, houses and the like. So those sectors have been gangbusters. And then, of course, the ones that haven't been have been those that are actually closed down, the travel and leisure and service sectors. Yeah. But coming off of that low base from the second quarter of 2020, we then have this boom in the third quarter of 2020. We'll have another boom in the fourth quarter. I think the president was accurate when he said we're rounding the turn on the virus because as an investor, I've been watching this the entire way along as to what are the developments for the treatment. And right now we have multiple antibody treatments that if you come down with a virus and you get this antibody treatment, there's 3 of Sorrento Therapeutics, Regeneron has one, I think Johnson & Johnson, or maybe it's Gilead, it might be, company starts with an M, but they're out there and you get these and the virus is out of your system in a couple of days.
The death rate
is dropping. Moderna was the other company.
The death rate is dropping significantly, right? I mean, so the death rate is down.
The doctors know how to treat it so much better than they did 6 months ago, too.
Right.
So, then you've got the anti-inflammatories, the dexamethasone or Doxamex, whatever that one was that Trump took. And so the treatments are better. The vaccines are right around the corner. Supposed to have one here in the fourth quarter, December. I suspect from what I'm hearing it's probably going to be more like a seasonal flu vaccine, but I don't know. I'm not a doctor. I just think as an investor that's probably what it's going to be like because you make a lot more money selling a lot more vaccines that way. So
you can recoup that investment every year.
So,
this one may be 4 months immunity. We'll give you another.
They don't like producing lifetime immunities anymore. They don't sell as many of those. When he says rounding the curve, I think, I think it all lines up for a 2021 that's going to be absolute gangbusters. I mean, I don't see that there's going to be any appetite for flying less airplanes in 2021 than we flew in 2020.
No.
We're going to fly more airplanes.
We're going to fly more airplanes.
In fact, there are some companies are going to do very, very well compared to other companies that they didn't have as strong of balance sheets and they had to drop routes. And the stronger companies are going to pick those routes up. So there are going to be winners and losers in the stock market as 2021 reopens. I don't think that people are going to eat out less in 2021 than they did in 2020. I
Well,
think we'll
I guess
go to restaurants more.
I don't want to talk about, the too much exuberance, but one of the things that was fascinating to me is you go back and look at the previous pandemic, the 1918, 19
Yeah.
pandemic area. That was followed by the Roaring Twenties, because I think,
Right.
I think there's a human thing to where you can only be depressed for so long. You can only be, everybody has a finite lifespan in the fact that people have to live. And I think there's going to be, maybe I'm wrong, but for 2021, I think you're going to see a return of exuberance just a little bit, because people realize that they have to live.
Yeah.
And it's, but also, that's not being rash, because they know more about the virus. They know when they're going to get that immune thing that needs to be suppressed. So they know how to treat it. But I think, people want to live.
Yeah. Well, yeah, and on these antibody treatments, the only thing that's preventing rapid deployment right now is the manufacturing and the approval process on a couple of them.
Okay.
Still haven't had phase 3, but then it's the manufacturing. How do we get millions of them created? But yeah, to your point, people, eventually, let's say this was just how the world's going to be forever. I mean, the human race just isn't going to live this way forever. It will put up with it for a while, and then, okay, I guess there's something out there that might get me if I
Enlightened self-interest will change your behavior, right? Isn't that, nobody wants to die, nobody wants to,
Yeah. So whoever wins the presidency is going to benefit, as you're talking about.
Yeah.
This 2021 is going to be gangbusters. And what we know about politicians, they will both take credit for it.
Yes,
they will all take credit
Yes,
for it.
they will. Yes, they will.
See, if Biden wins, see, you got rid of Trump, and I just gave you the greatest economy ever.
Ever.
If Trump wins, see, I beat the virus, and I gave you the greatest economy ever.
Well, I guess the other one a little bit is, do you think people put too much impetus on who is in the White House?
Yeah.
Is it, what are some of the fundamental things that, yes, I know, this is post-election. We're talking about that as a post-election thing. But as far as basics, how much is actually dependent on who's in the White House?
I think very little, because even as we have looked at this cycle with 2020, this event with the coronavirus and everything, people will talk about Donald Trump's response, and they will not add into the conversation anything about what his constitutional authority allowed him to do. The President of the United States cannot come into a state and do anything. He can't shut anything down. He can't order you to wear masks. He can't. That's all the governors. What he can do is provide guidance and funding. And the federal government, oftentimes with that funding, will have strings attached, and that's how they change behavior, right? Well, we'll give you this money if you act this way. But really, we've got 50 laboratories to look at all the governors and how they've all done it, right? And now the governors have made this issue of, well, we ought to get federal funding to deal with coronavirus. Well, why? Where does that money come from? I mean, we're all the same taxpayers. I mean, we're here in California. We pay taxes to California. We pay taxes to Washington, D.C. Now, why is it the money we send to Washington, D.C. ought to be dealing with our coronavirus issues in California? Mm-hmm. Why isn't the money we send to Sacramento dealing with the coronavirus issues we have in California? So there's like a complete lack of personal responsibility on the issue by how our federal system works, our governors, Mm-hmm. South Dakota did it one way, California did it one way, Texas did it another, Florida did another. In fact, let's look at unemployment numbers around the country right now. Okay, most recent unemployment numbers, Hawaii's 15.1% unemployment. Nevada's 12.6%. California's 11%. So we have the third highest unemployment rate in the nation. Well, all three of these states still have significant restrictions on
tourism,
these particular industries. Yeah, particularly their exposure to travel and leisure and tourism, and the industries that are impacted by shutdowns and capacity constraints. So. Conversely, we've got states like Nebraska and I think it was South Dakota are the two lowest unemployment rates in the nation. And of course, they're very rural and it's easy to socially distance there and have your business open. So.
People need to eat, and they need to grow foods.
Right.
They're still doing the same stuff they've always done, right? Isn't it?
Yeah. So yeah, there's just kind of this to your question about the president and his importance in this, whether it have been Joe Biden in office or Donald Trump. I mean, really, we ought to lay blame where the blame should be laid, and that's with our state legislators and our state governors. They're the ones setting the policies that actually impact our daily lives. The
Right.
President of the United States doesn't do that.
Right.
Yeah.
And I think there's a little bit of an unrealistic expectation that people, they want the president to do something, but, free markets work.
Yeah.
And it's, sometimes even just getting out of the way will be the fastest solution.
Well, one of the best pieces of advice we have as investors is to say, don't just do something, sit there.
Right.
Don't just do something, sit there. Sometimes the best thing is just don't do anything right now. You gotta kind of, but I think that there was a case to be made for early on with this, that you've got to put those travel bans on, and you've got to deal with immigration. I mean, it just makes perfect sense. If we know that there's a killer out there, we're not going to let it in the house. I mean, those policies, I think, are appropriate at the federal level. Yeah.
So this was a 100-year event. You need to respond like it.
Yeah.
It was.
Yeah.
So.
And at that time, we had no idea how risky it was.
Yeah. A question is, one of the things I think is tied into a little bit to the election is that looking at our next generations, and there is a real consensus among some of the younger generations that the traditional American dream is no longer possible for them. Mm-hmm. And whether it is or not, there's a huge block of them that believe it. And I don't know whether it would be, you don't want it to be a self-fulfilling type of prophecy, but I guess, I know you look to help people that already have assets to invest. But if you're looking at some of these younger generations, what do we say to them? How do we jumpstart some of these younger generations to where they see a path? So they see a path for them to home ownership, retirement. I mean, that's not given them by a third party.
Yeah. Well, to a point you raise, as a financial advisor, we don't deal with people who made their money quickly and easily. Like
Right.
we don't have any clients who just, hey, boom, they were 25 and rich, These are people who worked hard, saved money, invested it wisely, and over time, they built assets that now sustain them, take care of them, pay for
Right.
travel and entertainment, and the homes and vehicles they want,
Mm-hmm.
and financial security. So to your point of the young people and the American dream and the attainment of it, I think it's a matter of perception and how they perceive it ought to be achieved. Do they have to go earn it, and will it take a long time or is it given to them and given to them quickly? And if those two different worldviews will impact behavior, right? And the optimism or pessimism about whether it can be achieved or not is, well, if you think it's going to be given to you and it's going to come quickly, you'll be sadly disappointed when you get out in the world and nobody's out there just to give it to you and give it to you quickly. So the other thing I would say on the attainment of it is, no matter what career somebody goes into, if they make themselves valuable at that, and in particular more valuable than others in that job, then they receive promotions, and their clients or customer base grow. They have success. But that doesn't come overnight, right?
Right.
You have to be
Right.
better than other people
Right.
at it for a
Right.
longer time than them in order to have the market share come your direction, have the where you get a better job,
Yes.
where you get
Yes.
a raise, where
Yes.
you get promoted. That's the
Yes.
word I'm looking for, promotion. You want a promotion, you've got to be better than the other guys who
Mm-hmm.
could get that promotion. So I think if young people have a worldview that says, if I do what I can do today and I do it well and better than others, I will have success. Wasn't that the way that immigrants and still, even today, immigrants look at America. If
Yes.
I go there and I do what I can do every day, and
I'll
I do it
succeed.
better than others, I will succeed.
Yeah.
They believe that.
Yes.
Yeah, so to your point, young people who maybe don't have that view of things, well, they kick around a long time, always expecting something to happen for themselves,
Yeah.
and never doing those little
Yeah.
things on a daily basis
Yeah.
that make things happen for you.
Yeah. And on that note, is it even, if you statistically, if they start a savings program when they're young, I mean, it's an exponential thing, right? Even
Right.
if somebody at a young age, the magic of compound interest, isn't
Yeah.
that the...
Yeah, that's right. I mean, the idea, in fact, with the economy right now, one of the things we've seen with coronavirus is that the personal savings rate in the United States, it peaked, I want to say back in April or May, at over 30%, the personal savings rate, all right, of their income saving. Now, to put that in perspective, since 1980, the personal savings rate has very rarely been over 10%. Very rarely. Generally clips around 7 or 8%.
So we're storing it away. We're putting those nuts away.
Right now, it's just
Yeah.
a little bit under 15% right
Yeah.
now. So when you have a calamity like what we've had, people have tightened the belt, they've been saving, and this sets up for a 2021 that could be a tremendous explosion of consumption.
Yeah.
If things reopen and people, have their personal balance sheets in good order, and to your what you raised about young people and saving, is that if they can do that discipline early and keep their personal savings rate, it's typical, let's take a biblical approach of 10% tithe, right? And pay yourself that 10%, a 10% savings rate. That adds up over time with compound interest to where a lot of financial security down the line. In particular, if somebody's in business and they need then some capital for an opportunity that they see.
They can take advantage of those opportunities.
Right.
And I guess back to we're just about a minute and a half now. If you're talking to clients now for 2021, regardless of whether Trump or, I guess, what's your counsel? Where do you put your money for 2021?
Yeah, and we've been getting a lot of conversation about that the last couple of days. Well, where do we go for 2021?
Yeah.
We'll see economic growth. So really, you can buy the markets on dips. Feel free to buy the market on dips. Nobody should probably be all in at these market levels, but buy the market on dips. If you want to pick sectors, pick the post-COVID sectors. Those who are sensitive they were damaged by COVID. 2021,
The recovery
they'll be
sectors,
tremendous beneficiaries, and that can be airlines, restaurants, the banks. Those are three tremendous sectors. That I'd be playing.
Thank you very much. Thanks for what you do. No,
You're
thanks for
welcome,
counseling. I know counseling people and everything. It's been a life's work for you, hasn't it? I mean, it's been
21 years. Yeah.
Wow, very cool.
Yeah.
Thank you very much, Cory.
Thank you, John.
Thank you.